auction, I have marked that zone as a critical zone. So what I'm going to do is I'm going to adopt a middle of the road approach, not really fully bearish, fully bullish, but more of a middle of the road approach, and specifically, okay, look at what we are anticipating in the market, okay, for those 15 days which are left in the month of February, right? We are focusing on the markets on a series by series basis. And if you've been following me on my Twitter handle, that is the approach I like to take. I believe that with every single series, there is a change of hands, there is a change of inventory. And because of the change of inventory, which involves a change of volume also, so there is a need for a change of bias. And we carry a bias, okay, from a start of a series to the end of the series. I'm definitely not going to talk to you about what is going to happen 1 year from now, because I do not know. But what we know is based on the volume which is coming into a series, until that volume, okay, stays till the end of the series, we can make a projection on where we expect the market to be. And we break that projection down from a monthly time scale to a daily time frame. And within that daily time frame also, okay, what we do is we break that from a monthly time frame to a weekly time frame. And from a weekly time frame, what we do is we break it down to a daily time frame. And within that daily time frame, okay, we like to look at that market between 30-minute periods and 3 or 5 or 15, depending on your comfort level. 1 minute time frame, 1 minute, 3 minutes, or whatever, okay, you choose. Some people choose 15 also. So that's how, okay, we approach markets. And the larger structure, we go in, okay, why a market profile chart, which tells us exactly, okay, what the market is doing in a given month, a given series. And for the rest, we use the order flow to arrive at an understanding about where we expect the market to be in the near future. Right. So this is, okay, where we are. I'll focus on the Nifty, and we'll talk about the bank Nifty also. But first, just to round things up, I want to look at the market profile charts over here. And I'm reading you also. And thank you, okay, so many of you, okay, who have joined in, okay, for this session, and having a live look at the markets with us over here. If you have any questions, okay, do bring them along. I am open, okay, to receiving, okay, feedback from you, and your questions are as well. And we'll try to make it very, very simple for everyone to understand and see, okay, where we are. Right. So now, okay, what I'm looking at is the daily profile. And the reason, okay, we are here today and we are talking about this is because this was an FA, right? The failed auction. And whenever, okay, the market fails at a zone, we call this a failed auction. And we've spoken about this a number of times. And this is actually a temporary exhaustion. And who has failed over here? We say, okay, that the sellers have failed over here. Why did they fail over here? Because there was an extension. We call it an initial balance, which is the first 60 minutes of the session. And generally speaking, this extension goes down further. We call this an extension trade of the market profile. Now, bear with me, okay, if you are new to market profile and you never understood this before, or you never come across, okay, these kind of terms before, but this is something, okay, which you need to know, because this is how the markets move. They work, okay, through what we call extensions, through tails, through initiative buying, initiative selling, so some responsive buying, responsive selling. These are some terms which you should be familiar with, because that's how, okay, the markets work. And the faster, okay, you align yourself, okay, to these concepts and know, okay, how this works, the better it is going to be for you, okay, to get a bias of the market, right? So coming back to this, we see a little C over here, which is the alphabet C. So this is something which happened between 10:15 and 10:30 on the 12th of Feb. And you can say that the seller had failed to drive a market lower. Call it an exhaustion, call it a temporary turn back, okay, by a seller. And it happens because of profit booking, because, okay, of profits taken, because of buyers being aggressive, etc. But we know, okay, that this is not more than about 1 to about 5 sessions old. So we saw, okay, that market pull up because of this failed auction. And the market went up higher, where, okay, we got some supply, okay, coming back, right? So this is, okay, what happened the next session, the 13th. And today, okay, we are on the 14th. So we rose right up to about 23,300, where this is, okay, what we call a proper extension. So this was on the 11th of Feb. You can say that there was an extension over here, and this is the zone, okay, the market actually went to. This is the upper distribution of those two profiles on the 11th of Feb. And just have a look, okay, at how the market, okay, found supply exactly, okay, at this extension, which was a previous support over here. Now we pay attention to all these important points, and this is, okay, how, okay, we arrive at biases. If it had gone up over here on the 13th, which was yesterday, there would have been a case, okay, for short covering. But into this, and I'll drop, okay, an order flow chart later and talk to you, okay, about how exactly, okay, the supply came in. This is also, okay, you can see, okay, you can see and visualize this in hindsight and say, okay, yeah, the market found rejection over here, but actually around this point, okay, supply was outstripping demand in an order flow chart, and we knew that we were not, okay, going to go up further up over here, right? So this is, okay, what has happened yesterday. No, there was, okay, some element, okay, of that, that meeting, okay, which was supposed to happen, the Trump Modi meeting, and the market, okay, was building upon some anticipation. Based on that, there was some cover up which happened at the close as the market drove lower. They wanted to go down, but some of it, okay, got booked at the close yesterday, and it was settlement related also. But this morning we again opened up right about this VWAP. Above VWAP, the market should find demand. Did it find demand today? Absolutely not. I'll show you a live chart, okay, where the demand was not there. So what we see over here is that when the market gaps up, a price gap up is happening, but it needs a volume confirmation. What kind of volume confirmation? You got to see buyers or demand greater than supply. Now I'll use these two words interchangeably over here. When I say demand and supply, by demand I mean buyers, one and the same thing. By supply I mean sellers, one and the same thing. So we talk about it in terms of greens in order flow, which is a demand, and we talk in terms of reds in order flow, which is supply. So when I say something like a red cot, which is the commitment of trade, which is the volume of the market, net volume of the market, what I'm trying to say is that supply is greater than demand. And when supply is greater than demand in a small time frame, such as a daily or even a 30 minutes, then for that time frame, okay, price has to go down lower, right? And if the reverse is true, when there is a green cot, when demand is greater than supply, then okay, the price has no option, okay, but to go up. So price, okay, drives because of the volume interplay between buyers and sellers, right? Now what we got today is we broke down lower below yesterday's lows right over here, right? And this was the zone, okay, which was a previous VWAP. And in an order flow chart, which we'll come to later, we will see, okay, that this particular zone, okay, was that 2307 IB30 also, which had created, okay, that move up to about 23300. This was an extension. So this is something which came here today, which did not happen the day before, right? So if you compare, okay, what happened here on a market profile chart, right here, these two elements. So here you can say the seller failed, and that's why the market went up. Here in the same C period between 10:15 and 10:30, the seller is so strong, okay, that is forced an extension lower, and we are seeing the market, okay, go down and test these failures. Right now, just staying on this chart, what is important for us to know is this particular zone is not a 5 minute or a 30 minute or even 60 minute or a 1 hour, 1 day kind of a reference. It has validity over 5 to about 10 or 15 sessions, up to a series, up to the end of the series. I like to look at FAs in the context of an entire series, and that by that I mean the month of Jan, Feb, March, whichever series we are trading in. Currently, okay, we are trading in Feb. So what happens over here has implications for the entire series of Feb, where this volume has traded. And the simple rule over here is that the bias on a daily time frame, not a 5 minute or a 10 minute or a 30 minute time frame, the bias on a daily time frame is set to be positive above an FA point and negative below an FA point. Right. So today, if we get a convincing trade, okay, about 1 hour, about 1 hour, and I say 1 hour because it's about time and volume. The volume, okay, will flow in because, okay, of the action happening below this zone. So if I get a convincing volume, okay, below this 22,900 zone, okay, you can say that the bias of the market is again reset, okay, to going lower below the FA point. And what is the rule over here? Simple. Okay, the market is biased positive above an FA point and negative below an FA point, and we will use that. And what will be the stop loss? Okay, in which case it happens? These early sellers. So if you start trading, okay, below this FA point, you will say, okay, that this supply which started out over here is still controlling the market. And if we get a trade below 22,900 on a closing basis, or it carries on into next week, we will use this as a supply, as a reference point, 23,100, because the seller has initiated the market down over here around this extension zone, right? So these are simple concepts. But what I want to draw upon over here is the equation between buyers and sellers, or demand and supply. And at every point in time, this equation keeps changing. And because it keeps changing, price moves. And price moves only when demand, price moves up only when demand is greater than supply. Price moves lower when supply is greater than demand. So once we understand this market as a basic math between buyers and sellers, between demand and supply, what we have to understand is how do we track this demand and supply line. And all my years, okay, I have been trading. I have been able to do that, okay, only by what I call an order flow chart. Now, in the order flow chart, just like, okay, a normal chart, okay, you would look at, there are time frames, okay, and then you have to understand the market in terms of, the daily, weekly, monthly, the 5 minute, the 30 minute, the 15 minute. So for us, because, okay, we are looking at the micro side of the market in order flow, we don't want to go into a monthly order flow chart, right? Or we don't even want to go into a weekly order flow chart. Even the daily order flow chart is not relevant over here, because the big money, they take positions, okay, and they start closing that position by about 200 or 250 points later. You look at a daily chart where the price has moved, okay, from say like, okay, today, okay, the market is moved from 23,200 to about 22,846, which is about 350 odd points. Most of the big money, okay, which is coming at about 23,200 early in the open, early in the day, will be closing by evening. They will not carry positions overnight. Why? Because there is an element of risk involved, right? Because our markets will close, the US markets will open, and somebody who's, say, about, he sold 5,000 lots at about 23,200, and he's sitting, okay, on a 300-point profit. Why would he like to carry his positions, okay, on and take a risk of losing that profit which is made over 5,000 lots? Do the math. 5,000 lots multiplied by about 75 rupees per lot, multiplied by 300, that is the number, okay, which is at stake. And big money, they do not, okay, wait, okay, for about 1,000-point move in the market to profit from. A lot of us, okay, when we come into the market, okay, we have this retail mindset, and we start thinking in terms of 2 lots and 3 lots and 5 lots and 10 lots, which is, okay, what we initially, okay, begin our trading journey with. And we tend to think that everybody else is trading about 10 lots and 20 lots. And because, okay, we are trading those smaller numbers, what we require from the market is a bigger move. So if I'm trading, let's say, okay, about 2 lots, I want the market to move 1,000 points to be, making some kind of a money. But the big way of trading, the big institutions, they do not think like that. They do not want 1,000-point move. What they do is they work on strategies, and they work, okay, on the finiteness of those strategies. So they're not looking, okay, for that big moving 1,000-point move. What they're looking for in the market is about a 200-point or a 300-point one-way move in the markets, which can come, without a lot of pullbacks, pushbacks, etc. And once they get that move, once they know, okay, that they are getting that kind of a move, they enter the market with size. Because of that size, okay, what a normal retail trader who may be getting, okay, out of, let's say, 2 lots, 1,000-point move, the big money, okay, gets it out of about 100-point move also, 150-point move also. Because if you look at it in terms of size, the actual amount of money, okay, which is made, okay, of a smaller quantum of move is a lot more larger. So that is the mindset, and that is the mindset, okay, we have to adapt to as derivatives traders. Now, what we do is we tend to, okay, have that buy and hold mentality, like wait on a position. And this comes, okay, because of our dabbling in stocks and indices and all that we are told, like do SIP, hold for 10 years, hold a stock, okay, it's got good earnings and it's got a good trajectory and it's going to be holding. All that is fine. Okay, but that is relevant, okay, to the stocks we hold. To adopt that mindset in a derivatives kind of a situation is to play with fire. And a lot of people, okay, when they come to the derivatives side of the markets, they do not make this adjustment, and they have literally, okay, fire in their hands. Okay, they get burnt because, okay, the mindset is of an equity trader or a buy and hold. The mindset is also, okay, about buying the market at all times, which is not what the derivatives market is. The derivative market, okay, works up, works down, works sideways. Three things are possible in the derivatives market. And for you, okay, to make good money in the markets, in derivatives market, you have to be alive, okay, to these three possibilities also, right? So what we look for in the market as derivatives traders is a market, okay, which is shifting all the time. Okay, we are not married, okay, to one view of the market, which is that the market will go up all the time. We are open to the possibility of the market going sideways. We are open to the possibility of the market going up. We are open to the possibility of the market going down. And once, okay, we are alive and open to these kind of possibilities, what we do is we identify little points in the charts of what we know. It's not in me to understand everything, okay, which the market is wanting to do. It's not in me at all. I would not understand 100% of all that the market is doing. Nobody can understand the market 100% fully. But what I do is, like, I work with certain setups. Like, I have a setup, okay, which is called the failed auction, which you all know about. And if the market confirms that setup, I work a trade alongside it. I also, okay, work on a setup, okay, which is called an IB30 candle, which is my 30-minute initiative buying candle, which was here, right? So the last IB30 candle, okay, came in about 2 days back, around here. So I have a certain process, okay, which I work with it. I do not understand the market fully, and I don't want to understand the market fully. But what I know is that once I have this kind of a setup in place, like this is what I call a special bar out of all the bars which are there. And I make a rule, okay, around this. And I say that the market is positive above this IB30 bar, right? In my way of looking at it, in my way of process, or in my way of looking at it, I would say, okay, that this market is positive about 23070 and negative below it. Okay, and I will activate this trade of about 23,180, provided, okay, I get some greens or demand. What is this bar? This is about initiative buying, right? So I got some buyers over here, I got some buyers over here, and I wanted to see some more buyers in the next few bars, right? This is what we call an IB initiative buying, and I know, okay, the net of this bar, okay, has to be a lot of green. But what I also do is, in terms of a process, I like to see demand above the high of this bar. And if I see demand above the high of the bar, I'll enter into a trade with a stop loss of lows of the bar with a small filter. Now, this 23070.95 is not absolute. It's just a number which was printed as a reference, okay, for the bar. Somebody, okay, bought or sold over here, and that's why, okay, a trade happened, and that's why this number got printed. But I got to, okay, know, okay, how to play around this number, and I add a small filter, say about 14 or 15 points for the Nifty, say about 35 or 40 points for the Bank Nifty, and try to utilize this as a zone of trade, not as a line. There are no lines in the market, right? Just follow, okay, the rhythm of the market. Just follow, okay, what nature does in the market. There are no straight lines in nature also, right? So in the same way, okay, in markets also, there are nothing called a straight line, okay, and the market, okay, will touch that line and bounce, and all those concepts are redundant, okay. They do not work in they work in the derivatives market of today. So what I do is, I don't treat this as a line in the sand. I treat this as a zone. And every time the market comes back at this zone, I want to see, okay, if there is more demand or more buyers coming in at this zone. So this time, okay, it came here around 23056, around this 145, 215 zone. And I see a COT which is green. And I know, okay, this market, okay, is not getting supply to bounce back. So next day, okay, it bounced further and it went up to about this 23,275. Not a lot, because, okay, this COT, okay, was only about 337. Technically, okay, I would like to see a COT, okay, about 3,000 or something in an IB, which is called a very strong IB bar. Not in this case. But for the 337, it did give a bounce, holding the lows till about 23,300. Now, this signal which came in, is part of my process. And if you've gone okay through the orientation, I mentioned it very, very clearly that all signals have a time expiry to it. And what is that time expiry? 10 bars, right? So if it works, okay, and it keeps going, good. If it does not give you the momentum, it does not give you the trade, wait till the 10 bars are out, the signal is nullified, okay, and we take a fresh bias from the market again, right? So count token over here, 1 bar, 2 bar, 3 bar, 4 bar, 5 bar, 6 bar, 7, 8, 9, 10. Around the 11th bar, okay, the market okay got exhausted. It did not okay move up to the expectation. So 10 bars are over, start looking at it in terms of getting fresh signals from the market. The old bias, which was established at 23,070 on the long side, is no longer there. And now, okay, you're looking for opportunities to see if the market wants to continue with that old bias or looking at sells again, right? So this okay happened yesterday. There wasn't a lot of okay demand coming in, and I know that because this is my IB high, right? Yesterday, the initial balance high, which is the high of the 60 minutes, and I like to see buyers keep the market up above initial balance high. And yesterday, okay, it was around 10:45, half an hour, 15. No, they did it. They did try okay to keep the market back above initial balance high, but they did not. And later on, okay, we got a close. Some of that red caught okay got closed at the end. We got a gap up, and what we've seen since open today is a market okay which is getting a lot of red cots. In fact, okay, the net cot is red. Now you can look at it and you can ask okay one question to the market: what is the market trying to do? It's wanting to go down. Is it doing a good job going down? The answer is always going to be in terms of what kind of supply you are seeing. The market will be doing a good job going down if most of these 30-minute bars are red. They have red caught, or you see initiative selling. So currently we are not seeing any initiative selling, but there is no evidence of demand okay which is coming into the market to arrest okay the slide which is happening, right? So just to bring all of this together, what we are doing is we are working okay with a number of parameters, and all those parameters are built on the equation between demand and supply, buyers and sellers. And in fact, okay, if you look at the market and you just break open the market, what is there in the market? There is somebody buying and there's somebody selling. Now, if you just strip yourself up into from all those things, okay, which you've been told that there is a technical indicator and this indicator is important and this is going to predict the future, and if this goes to this level, the market bounces and this and that. You know that indicator itself, okay, was based okay on demand and supply, and that it says over there, right? It's oversold. What does it mean? Okay, that there was a lot more okay supply coming in, or overbought. What does it mean? Okay, that means okay there was too much demand over there, right? So everything is still based on demand and supply. And what we are asking you to do is take the focus away from understanding the market in terms of indicators and start looking at it in terms of demand and supply. And once okay, you get to that kind of an equation where you're looking at the market in terms of where demand is higher, where supply is higher, okay, you will be at a much more better position to understand how it is going. Right. So just to quickly sum up, okay, where we are right now, we are at an important zone, 22,900 still. We are trading around that. I'd like to give this market about a few points over here and there. It's going okay for 25, 30 points because this is an important zone and the market is going to be doing something at this zone. Am I looking at the market bouncing from here? The evidence of the chart is not suggesting a bounce. How do I know? Because my cot is still red, right? And the 10 bar cot is still red. So I am looking at this market and saying and asking myself, is demand coming up over here? There is no evidence of any demand coming up over here. Is the previous supply okay, which is coming from the open, is it closing? Not yet, okay, because I'm not still seeing a lot of green coming into my cot level, the commitment of trades over here. So existing supply from the market is still open, and at this moment we are nearing around 135. You can say okay that the previous supply is still there in the market and holding, and none of it is closed. You can take the other view and say that demand okay, should have come in at about 22,900. It has not come in. The previous bounce okay from 22,900 was because of seller exhaustion, and that's why okay we called it a failed auction, right? The seller failed temporarily, but we've seen evidence okay that he's come back at 23,300 higher. right? So that in sum is what I wanted to communicate, a more data driven approach. Okay, this is not okay something in terms of having a bias in the market and working okay with an understanding that the market will do this or will do that. We don't expect the market to do anything. What we are instead doing is we are allowing data to speak, and we are adopting something okay which we at WeTrender call a completely data driven system. Let the data speak, let the market speak. We will do okay what the market does. We will not catch the exact bottom, we will not catch the exact top, but we are not here okay to catch tops and bottoms. We are here okay to see okay whether we can align ourselves with the movement of the market, right? So with that said, if you have any questions okay about what we've discussed and what we are going to be doing over here, please okay feel free to ask. I will take a few questions, and yeah, we will just conclude okay with one or two more points. So the question is how to interpret the LLT of 582 lots with the green stack at 11:45. Okay, what time frame was that? 3 minutes? If you have any questions, guys, okay, bring them along. So as we are looking at this order flow chart, as we are looking 30 minutes, just answer that question for once. 30 minutes, okay, 13th of Feb. I think okay, you're referring okay to this one. This is what we call an RB candle, responsive buying candle. So this is a previous seller who is booking profits, and that's why okay this candle became a responsive buying pattern. Is there still supply in this bar? Yes, because okay this caught okay is still red, minus 1272. So even after he's booked, okay, there is a lot more okay supply okay which is still there in the market, which is why okay we made a lower low also, right? On these kind of numbers okay will keep coming in, because okay we are not talking in terms of one or two people only trading the market. So, for example, okay, even okay, if you talk in terms of institutional activity, or even if you talk in terms of FIIs, the foreign players, we tend to think about FIIs as one entity. The truth is, okay, the FIIs are about what 200, 225 in number, right? And every one of them has got their own strategy, their way of looking at it. So some people like this will book, other people okay will come. What we have to do is we have to find out okay the net equation of the market, not be focused on only one player. This is one LLT. What is this LLT doing in context of all the other sellers which are coming? So I would look at all these reds also, and they net up to more than 770. Some of this okay could have booked over here, or this particular 667 has booked over here, right? So don't lose focus okay of the entire picture just because of one. So in my way of looking at things, okay, I tend to have a hierarchy, and in that hierarchy, the IB and the IS, the initiative buyers and the initiative sellers, are top of that list. Yeah, their weightage on price action is a lot more. And I've said this before, and I'll say it again. Think of it in terms of your Nifty 50 with the different weights of all the instruments. Say you got your Reliance, you got your ICICI, you got a Bank of Baroda, you got okay some your Adani, and you got okay everything else. Everybody has got a different weightage, even though they are a part of the Nifty 50. And one Reliance, okay, if it starts moving, tends to have a bigger impact okay on the entire index. So likewise, okay, think in terms of IB and IS being more powerful in order flow than something like some 45 number here or an 18 number here. Similarly, okay, I'll prefer an LLT, large lot trader, in an IB and IS candle as more important okay than an LLT trader over here, which is in an RB, which is a booking pattern, which is not an initiative pattern. And again, okay, you have to look at it in terms of this 10 bar caught, whether this is increasing in every TPO. Like today, it's increasing in every TPO. TPO is what we call every 30 minutes of the market. And whether okay we can see okay these people adding to positions or generally closing. So on the evidence of what I'm seeing right now, there is no demand okay which has been coming in. There isn't a lot of big green okay coming in. Some people will come book and all, but the net trend is still dominant and in favor of sellers over here. So yeah, the question is 22,961. Okay, we saw some fresh sellers adding. That's because there was some initiative selling, okay, which came over there, right? So this is represented around. There was an initiative seller which came up over here at 11:36, and there was a liquidity dump which happened. I think it was this candle, if I'm not mistaken. So this is a liquidity dump where there was a lot of zeros, okay, which came in, and generally, okay, when order flow gives you this kind of a messaging, this zone, okay, tends to be, okay, future supply. So we've come back, okay, to this zone around this 22,974. In fact, okay, we just went up higher around that 22 23,000 zone from where, okay, this selling happened, and we have broken down lower, right? So this is just nuances. But as a beginner order flow, I would encourage, okay, most people, okay, who are new to order flow should start thinking in terms of IB30 and IS30, where traders are initiating, where traders are responding, and where, okay, you can, okay, get the equation of the market right, and gradually, okay, build up, okay, on the remaining elements of the chart. You could also work with something as simple as a failed auction concept. Okay, get going, okay, with one of these. See, what we believe is the market is such a big ecosystem that it cannot be fitted into just one strategy or one way of looking at things, and most of us, okay, we do that mistake. We go to the market, okay, with one bucket, with one strategy, and we try to, okay, pull the entire river, okay, into a bucket, and we try to, okay, to understand the entire market also in terms of a strategy. Well, that does not happen at all, right? So you have to be alive, okay, to the various possibilities on offer in the market, the different things, okay, which are possible, the different permutations, the different combinations, and the best way to tackle all that the market, okay, throws at you is to be ready with a bunch of activities, a bunch of strategies, understanding the market, okay, in different elements. Yes, okay, there is a lot of work involved, but without doing work, okay, the amount of money, okay, which is to be made in the market is not going to come to you, right? You have to put in the work. There is legwork involved. There is a lot of effort involved, and you have to make and take steps, okay, to read the messaging of the market. So thank you, okay, for your observations, okay, and what you are mentioning, and your comments, guys, okay, that this is working. The question was, okay, is a cot is a net delta? We don't tackle delta at all over here. Uh, we don't work with delta. Delta is something, okay, which I've spoken about extensively in my previous webinars. COT is commitment of trade. It is not delta at all. We do not use delta at all over here. Right? So if there are any more questions, guys, okay, I'm scrolling. I'm scrolling. If you have much appreciate Virupaksha, thank you very much, okay, for your comments. Much appreciate. RBs and IBs show up in the charts. IBs, okay, are marked, okay, whenever they appear. The question is, okay, how do you identify IBs? So the RBs, okay, have to be understood. So what we have is basically, okay, we have a process in which we have explained, okay, all of these things. But just to simplify things for you, the initiative buyers and initiative sellers are marked in charts, right? So every time an IB or an IS candle shows up, it will be marked in the chart as well, and you can, okay, have a look at it. So this is the last IB signal which we had, and it gets marked as an IB pattern with a small asterisk in green. If it's an IS, it will be marked in as an IS as well, right? Any other questions, guys? Okay, I'll take one question more. I'll take one question more. So what we have done is, if you want to know a little bit more, okay, about how, okay, these things work and how the calculations, etc., are done, we have already, okay, done all this for you, okay, in what we call, okay, our eco section, which is what we recommend, okay, for people, okay, who are new, okay, to this concept. It's a small course, okay, of about 12 powerful videos which walk you through all that I just mentioned it, looking and understanding the market in terms of demand and supply, tracking what the institutions are doing, and spotting the real market moves for what it is. So these are about 12 videos available to you based on the understanding of market profile and order flow. And this is about 4,999 plus 18% GST, and it's a lifetime access. And you can log in directly to the website to have an access to this. So this is the ECOS. What we also have is the VMR, which is the mentoring room, where all these charts which are live are explained to you in a live market situation. So we talk to you about what to look for in these charts which we have, what to understand out of the moves of the market, and how things move, and how you should be alive to the possibilities of the market. And if you're just looking for charts, we have the chart section at charts.wetrender.com, where you would get access to all these charts which I am looking at right now. So this is also there. You can go into the pricing option and pick up whichever suits your plans and your purposes at the moment, right? So these are the subscription plans which we have. We have free access, unlimited, but the free access cannot be given on live data. That's one of the rules we have to abide with as NSE members. It is a little bit of a delayed data, but we have some very good plans for premium, expert, and elite for all kinds of traders. If you're an order flow trader, we recommend going in with the elite plan, which is the entire order flow structure, and within it you'll get one at which stocks, and one with indices, futures and options, so all indices only, Nifty, Bank Nifty, etc., etc. So that is at about 4719, and one which stocks is about 9439, and that includes access to about 11,000 order instruments which are traded at the National Stock Exchange, right? So this is where it is, and where we are. So I hope this session was useful and helpful, and you could begin to work a bit about your understanding of markets. Remember, it's all about structure, and it's all about the movement of volume. Price follows, right? So all you have to do in a market is understand what demand is doing, what supply is doing, and take steps to address that demand selling imbalance. And if you can identify points in the market where demand is higher and take calls, long futures or even short puts, then you're getting yourself a good environment to get into a profitable trade. And if you can identify situations in the market where supply is higher for your time frame, whatever time frame you're trading in, then you're putting yourself into an advantageous position to buy long puts, short futures, short calls, as you may be comfortable with. But the key is to identify those elements in the chart where demand and supply imbalances exist, and if you can work with them, you have a better chance of getting successful in the markets, right? So I leave it over here, guys. It's about 23,870. I'm not seeing any kind of big demand adding back in the market, but it's about 149, and things can change. Remember, the most important data is the most recent data, right? So what has happened in the past is not really important for markets. What is happening now is the most important thing, because this which is coming in is going to determine what is going to happen next. All that is coming in terms of price and volume has already brought the market to here. So we are at about 22,846. That's happened because of all the selling which is coming from the open today. In fact, the selling of the past 3 months, right? So we have come to this level, but where do we go from here is completely dependent on what kind of volume comes here. So stay focused on current information, stay focused on what the markets are doing now, and work yourselves with the power of data on your side. I wish you well. Thank you for coming in, and if there are any questions, please feel free to write to us at support@wetrender.com, or you can DM me on Twitter also. My colleague is Uttam. You can join in. You can DM him as well. He does most of these sessions over here. And if you have any other questions, you can WhatsApp us also on 9284331270. Thank you all for joining in. I'll end the stream over here. There's going to be a recording on YouTube as well as my Twitter ID for you to refer to for the next time. Thank you all for coming in.